Are you confused on how to use ICT breaker blocks? People don't know what ICT breaker blocks are. They have no clue on the secret hidden meaning on how to actually effectively use breaker blocks and employ them in their trading. Welcome to everyone new to my channel. What is up, guys? My name is Arbaz, also known as AA Bands FX. I'm a verified prop firm trader who has made over $200,000 in verified trading profits through prop firms, and I'm here to change the game and explain to you guys concepts that actually work in trading. I guarantee you, if you start using ICT breaker blocks today, you will see results in your trading. But enough talking, let's get right into the video. Okay, so what are breaker blocks? Okay, you guys might have watched some ICT videos and, done your own due diligence, your research on this topic. But, I'm really here to break down these concepts in a simple, straightforward way that's not, 30 minutes long, just something practical, simple, and just right in front of your face in, 20 minutes, right? So ICT breaker blocks, what is a breaker block? Okay, so first you have to obviously define an order block. So an order block is, remember, it's the last down candle before an up move. So let's actually bring out my handy dandy trading view tool here. So the order block is going to be the last red candle before an up move, or the last green candle before a down move. So for example, let's say the market is trending up like this. Okay, let's say the market's trending up like this, and let's say this is a bullish break of structure. This is a bullish break of structure. Great. Now this area right here, where that last swing leg is going to be called an order block. All right, it's going to be called an order block. Specifically, it's the last red candle before that up move that eventually caused that break of structure. So that's simply what the definition of an order block is. Now, if I were to flip this, same concept, right? The last green candle before a down move. That is what an order block is. Now, let's bring myself over to the chart here really quickly so I can show you more practically on the chart what an order block is, okay? So as you can see right here, this is a great example. We see the price broke structure to the downside right here. Now, this last red candle before that, green move down, because now this is kind of inverted. Actually, this is inverted. I was like, wait, there's going to be an up move. So I had that inverted. This red candle before the green move up is going to be your order block, okay? Now, a breaker block is a variation of the order block. It is going to be an order block that was broken through and displaced through that now acts as a support slash resistance slash retest area. That's simply what the breaker block is. So as you can see, price broke structure to the upside right here, right? This is the last red candle before the up move, which is on the 30-minute. And notice now how price dumps, right? Now coming forward in time, price will just dump, right? It just dumps past this point. And as you can see, it's displaced through. It's displaced through fully. So this point now is called a breaker block. And if the order flow is now shifted downwards, the breaker block, this area of last demand slash supply, is going to be the area of which price retraces to, reacts, and has a continuation down. So let's continue on with the example that I have here. This is kind of the model which I'm trying to explain to you guys. But essentially, you have a change of character slash break of structure. This is going to be the bullish scenario, but it's going to be a bullish order block slash red candle before a green move. And then, as you can see, we have that area marked out with our yellow tool, our yellow region. Now, this area gets invalidated with a displaced swing leg. You see that red, area? That's a swing leg that displaces through and closes immensely bullish or bearishly, or in this case, bearishly below that area. And now, assuming the order flow is now shifted bearish, price will retest that area and continue downward. Okay, it's going to be a retest of the bullish order block that was displaced through, now acting as resistance. Now, let's kind of move forward and show you another example right here. As you can see, this right here is a bullish in character to the upside. We close above here, we're closing, we're holding above this area. And now this last red candle before that up move is going to be your order block, your bullish order block. But look what happens, right? As we see, price comes in to retest that order block and then just immediately dumps through. Now, this area is going to be your breaker block because it's the last point of interest that price broke through and, get invalidated, right? Okay, now look what happens, guys. Time plays out, price is playing out. Price now comes to retest that breaker block area and then has that initial, that reaction downward. It's absolutely amazing. And this has actually happened pretty recently, but as you can see, it's the bullish order block slash supply demand level that gets broken through and now acts as a supply slash resistance level. So let's actually go to the chart, because that exact example happens right here. And I'm going to delete all these drawings right now. But as you can see, let me actually move this right here. As you can see, this area, boom, this is going to be our order block, right? And price comes in, retests it, and goes down. Now, how do you actually master this? Now, a couple things. You can either just take a entry straight off that level, off the open, the midpoint, or the closer of that level. I like the midpoint usually. You can just take a trade off the midpoint, stop loss below the high. And now, assuming order flow is bearish, you can target an external swing leg or some type of point in regards to your RR, or another level that gives you good RR. So in this case, let's say you want to target that low, great, 3 RR, amazing trade. Now, how can we make sure that these levels are going to be respected and, with an added layer of confirmation, and we just don't want price to just, fully just blow through like this, right? That is where your lower time frame analysis comes in. So when price reaches this level, I teach a couple things. I teach doji confirmation and a couple other things, but you can wait for that candle closure. So let's say price comes to this level, and now you're waiting for that 5-minute doji confirmation to really enter in and get a good trade in, and that happens right here. So you'd enter in on that order flow candle right there, that doji confirmation, stop loss above the high, and then you'd be targeting whatever. And now, assuming you wanted to go for some more RR, that same point could have gone for like 5 RR all the way to the bottom. So it's actually amazing stuff. And, if you want to have an even better entry, right, you can go down to the 1 minute and then simple stuff. If you already reacted from that higher time frame level, and this is why I always like to say higher time frame controls the narrative, and that is how you have to be, entering your trades or analyzing your trades based on the higher time frame. And then going down to the lower time frame and looking for the same thing and then executing. So you can go down to the lower time frame after that initial reaction happens, right here, and now you can analyze your structure. So where do we see our most recent supply or demand in this area, right? Our most recent supply and demand based on this 1 minute structure, if we go down and zoom, is going to be right here. So this is going to be 1 minute supply. This is going to be 1 minute demand. It's going to be that area. And you can also mark out these levels right here. But these are going to now be your highest probability levels that price has a reaction from. So what you now can do is you can take a trade off each one of these, or maybe you want to have a certain threshold. Maybe you want to only look for the highest level or whatever. I can't tell you how to do that, but this is just another way to get really, really good RR. So let's say you took a short off like this, stop loss below the high. Yeah, you could have gotten a quick scalp in. This went for 1 to 2. Now let's say you took this level and that was the trade. Let's say you got in. This ran for about 1 to 1.4, 1 to 1.5, and then in actuality, if you held this trade all the way to into the week, this would have gone for 12 RR. So it's actually crazy how you can use these breaker blocks to your advantage. Now, you can also use the ideas of your swing structure. So on the lower time frame, we know that the market is fractal and that we're making swing structure. So you could say, hey, we're breaking structure to the downside on the lower time frame now, and this is obviously going to be our change of character right here. Then you can say, hey, I'm going to be looking for levels in line with this swing leg now to retrace off of to then enter, right? And in this case, obviously, this demand level is really, really, really strong in this the supply level, which is dynamic. This is zone, right? So you can just say, hey, price opens up, you re-enter off some type of retrace to this area, and it's just that simple. You just execute, and look at that, price just dumps for the whole the whole period. It's absolutely amazing stuff, guys. And yeah, I hope that made sense of how you can kind of use the lower time frame to enter, but I kind of want to continue with this video to kind of give you examples on just being able to identify these breaker blocks in real time, because I know they can be kind of hard to identify in real time. But let's just use it, let's say the 30-minute time frame to identify these points. So let's say the market's turning down, we change character to the upside a little bit on the lower time frame. This is a corrective leg, but in reality, this area is going to be our breaker block. Okay, now it's up to you as well if you want to use just the candle body or the candle wick, but this is going to be our bullish order block. But then when price does this, right, as you can see, price does this, it displaces through, we close below that low of that breaker block around here, and then what does price do? It retests that breaker block and then has that move down. Okay, so now, once price closes below, we can identify this 100% as a breaker block now, and it's the same principles, the same concepts, right? Let's go down to the lower time frame now, over here, and it's the same principles, right? Let's go down to the, let's say you want to enter on the 5 minute. Let's say we're doing a 5-minute example. Now this is a pretty wide, pretty big, breaker block. So you can wait for a retest of like the midpoint of that breaker block, let's say. So like right around here, And then let's say, you're waiting for that doji confirmation, something really clean. I would say you would enter in on that candle right there, and the stop loss, above the high, or something like mechanical, like 30 ticks. And this would have ran, right? This wouldn't have stopped you out, but this would have ran all the way to that swing low for 6 RR, right? And you got to be able to stomach your trades. I can't tell you when to move to break even or whatever. If you were doing a scalping model, this would have gone for up to 1 to 2. And just exactly the same principles that I was teaching you on the lower time frame. You can go to your 1 minute supply demand area, and then once price kind of closes below, you can identify your lower time frame supply and demand. So if I were to zoom in and show you and ask you, hey, where's the supply and demand? Well, you'd have some supply right there, you'd have some demand right there, and let's kind of zoom out a little bit as well. You'd have some demand right here, I would say, and then you would have some supply right here. Okay, and notice, guys, how these levels are actually in reality working. I'm just going to delete this for now just to kind of show you how these supply demand levels are working in real time. But it's not a coincidence, guys, that this level reacts, and obviously over here in general was the area of where the reactions were happening and having moves downward. And now you can use this to even scalp, right? These levels can be really, really reactive for you to scalp. Like you could take a scalp off here, you could have taken a scalp off here, but obviously if you were looking to just hold the trade in line with the full narrative of this being a breaker block now and order flow is bearish, this would have been your entry point. You could have a tight stop, let's say 20 ticks, and then you would have just rid this all the way down to that low, made a huge 9 RR trade. So really powerful stuff, guys. Using supply and demand with ICT breaker blocks, it's a really, really high probability concept and method of making money. And let's just keep going on because I want to show you guys and I just want to continue elaborating to you guys. So right here, right, breaker block that we identified, and let's say also now this is a big concept as well. When you are looking at a break of structure to the upside, it's up to you what you want to do, right? It's in general, an order block is going to be the last red candle before an up move or down, or before an up move, and the bearish order block is going to be the last green candle before a down move. But in this case, you can either use the extreme point, the extreme order block for your breaker block, or the one that directly broke the structure and closed above. So in this case, right, you don't really see any recent red candles that closed above this this high right here. So this is obviously going to be your order block, right, and which then becomes your breaker block when it gets displaced through. Now in this case, it's hard to say, do you want to use this red candle, this order block, or this order block? Now I can't tell you, it's all up to you, but what I can tell you is using the extreme is always going to be like a surefire way of analysis. So this would have been your extreme order block. Now, if you want to engulf it to that, you can, but in reality, this is the origin of that swing low that breaks that structure. So that's why this would be your order block. And then notice how once we get this displaced through, this now becomes your breaker block, right? This now becomes your breaker block. And then what does price do? It comes in, retests that breaker block, and then moves to the downside as, just continues to the downside. So then we can go again to our lower time frame. Once price hits our breaker block, right, we know that, hey, if we see some closure below that breaker block, we can then wait for some lower time frame supply demand retest, and we know that our supply is right here, our demand's right here, and obviously this would have been your number one, let's say you entered in off this retest, tight stop like that, you got stopped out, fine, you entered off this next one, tight stop, and look at that, guys, just amazing trade, right? This were, if you're scalping, this went from anywhere from the 1 to 2.5 RR distance. But then if you understand that, hey, we're breaking structure to the downside now, you can hold it all the way to that swing low and then just get a nice 10 RR trade. It's absolutely amazing what breaker blocks can do. So let's continue. Look at that. Simple, absolutely simple stuff, guys. Let's continue by being able to identify these breaker blocks, because I think, being able to do that is a really handy dandy tool. Example right here, exhibit A, right? This is a order block now that got displaced through right here. And then, we don't necessarily get a retest until much later. I would say these become usually kind of invalidated if for a couple days they're not retested. Now, if you wanted to use that slight retest right there, the fact that we closed above, you could have. It's up to you. I can't tell you what to do. But we're just again identifying these order blocks, right? Now you can also use this one, right there. That gets displaced through perfectly, and then it comes and retest that area. We look for the same confirmations. We just execute, and you could have caught that trade. Same thing, right? Over here, this is going to be your order block, right? It gets displaced through. Then we come in, we retest that order block, which is now a breaker block, right? Because it was the last candle that got broken through, and then price goes higher. So really handy dandy stuff. If you guys want more clarification on this, feel free to, drop a comment. I don't want to make this video too long. We've already gone kind of past the thresholds that I like. But yeah, guys, drop a sub. I hope you like this. This is some real sauce. I don't want to overcomplicate it. And join the free Discord. If you want to work with me one-on-one, you can apply for the mentorship in my bio. And I hope you enjoyed the video. And with that, I will see y'all later. Take care. And happy holidays. We're recording this on December 24th. So happy holidays. Stay safe, stay warm, and enjoy the time with your family. Peace.